This message is proudly brought to you by the Capital Markets Authority of Uganda.
Yes, a very good morning and many thanks for keeping it NTV Uganda. My name is Romeo Busuku and I come to you yet again with another pertinent conversation, largely focusing on how best we can foster socio-economic transformation through collective investment schemes. Assets under management by the 5 collective investment scheme managers in this country have hit 1.15 trillion Uganda shillings. That is a milestone. They've already overcome the targets for 2024-2025 as early as 2022. And that's why we are here, to blow the trumpet. But as we do, yes, we want to actually figure out some of the ways or modalities through which we could foster socio-economic change right here within Uganda through collective investment schemes. But what are collective investment schemes? I'm now joined by 2 gentlemen. That is Mr. Mobale. He is the country manager, Sanlam Investments. And we also do have, that is Mr. Dixon Sembuya. He is the Director, Research and Market Development at Capital Markets Authority. Let's get into this conversation. Gentlemen, very good morning.
Good morning, Romeo.
Indeed, let me start with you, Mr. Dixon.
Yes.
Capital Markets Authority. What exactly do you do at the Capital Markets Authority? And when we get done with that, we'd like to know what are collective investment schemes.
Okay, thank you very much, Romeo, for hosting us.
Indeed.
We are indeed very delighted for this particular opportunity. Now, the Capital Markets Authority is a regulator.
Indeed.
And, you know, as a regulator, we do what all other regulators do.
All right.
And usually I like using the analogy of Bank of Uganda as a regulator. You know, Bank of Uganda licenses banks. Bank of Uganda will, you know, inspect banks, undertake surveillance, and ensure that all banks, you know, comply with the relevant legal regulatory framework. So in the capital market space, we have the Capital Markets Authority. And if you look at the role of the Capital Markets Authority as a regulator, we regulate the capital market space. We provide licenses to the different players within the capital market space. We're also charged with developing the capital market space. So in addition to regulating, you know, acting as a watchdog to ensure that there is law and order within the capital market space, we also have the role of actually contributing to the development of the Capital Markets Authority, capital markets industry within Uganda. So in a nutshell, we are a regulator. We are a watchdog for the capital markets industry, and you know, we do all this with the main objective of protecting investors. Okay, so at the end of it all, we want to ensure that investors are well protected. What they've invested is safe and sound.
Indeed.
Now, you've talked about
collective investment
schemes. Now, this is an investment avenue. It's an investment vehicle. So you have me, you, Romeo, and Mugalia here. We pool our money. Okay, we pool our money in this huge pool, or a certain pool. Then once we pull that money, we hand it over to a professional manager, such as Mugalia here. And so that professional manager will then go ahead and invest our funds, okay, so that we get a good return. And he will invest our funds based on certain, you know, certain requirements as laid out by scheme particulars. Okay, they're usually certain documents that govern, you know, this collective investment scheme. Okay, so he will invest on my behalf, on your behalf, based on you know, those scheme particulars, with the objective of ensuring that I get a good return. And there's so many benefits that accrue as a result of you know, someone being able to invest through collective investment schemes. I mean, this is a pool. Okay? And the fact that you are pooled, so me with my modest contribution, probably you with something really huge.
Indeed.
You know, all this is pooled, and so you create a large scale. Okay, the economies of scale. Okay, and of course, wherever the economies of scale, so many benefits come. I mean, lower costs. I mean, since we've pooled, it essentially means that you can be able to invest as a group in an investment that, or in a financial instrument that you wouldn't have been able to invest in as a single individual. Okay, then you have access to managers like Mugalia here, professional managers. I mean, these are people who wake up every morning and all they think and dream about is how to help your investments grow, how to give you a decent return. So there's so many benefits that accrue as a result of being able to pool your resources together through this investment vehicle or this investment avenue. And I would actually urge Ugandans to become a part of this. I think we currently have about 34,000 Ugandans investing through collective investment schemes. But I think there's so much room for growth. And, you know, I would urge, you know, those who have goals, if you have a goal, then this particular investment vehicle is a suitable vehicle that will actually enable you get to your goals. Yes.
And the viewer would also like to know, before we engage, that is Mr. Mubale, what is the genesis of the current structure of Uganda's collective investment schemes landscape within this country?
Okay, currently, I think you've already mentioned the fact that currently we have about 5 licensed collective investment scheme managers. Now, these are companies that have been vetted by the Capital Markets Authority, and of course, with the vetting, we ensure that they have the technical capacity, we ensure that they have the necessary resources to undertake the operations. And again, just as an aside, I would actually encourage Ugandans that whenever they're investing, they always ensure that they only invest through licensed companies or licensed firms. So I would encourage them that before you invest in any sort of investment, especially financial instruments, just ensure that you take some time and visit the Capital Markets Authority website.
Indeed. So that you find out the certified CIAs.
Yes, to ensure that whoever you're dealing with is basically licensed, whoever you're dealing with is vetted. And I think this will help in you know, avoiding you know, the fleecing that we've witnessed, where you know, members of the public have been fleeced by, you know, unscrupulous individuals. So I would encourage members of the public to actually consider this. I mean, make sure that you only deal with someone who's licensed. Make sure that you visit our website before you take that decision. Now, turning again to the structure, I think one of the things about collective investment schemes and how they're structured, I think if you look at the current structure, one of the main objectives is risk management. You want to ensure that investors' savings are well protected. So if you look at the current structure, you have quite a number of parties.
All right. And
the role of each party is to contribute to the risk management process. Okay? So you have what are called trustees. And I normally look at trustees as a board of directors.
All right.
They're like a policy decision organ. Okay? So they basically ensure that your funds are invested as per, you know, the constitutional document, the constituting documents. Your funds invested as per the scheme documents, and they're usually considered to be the legal owners of these assets. And as an investor is considered to be a beneficial owner. Okay. Then from there you have a custodian. So the role of the custodian is to hold your assets in custody. Okay. So the manager, in this case, someone like Dennis here, the manager does not interact with the investments. Okay. So the role of the manager is to basically provide that investment advice. Okay. They'll provide advice on how to invest your savings. Okay. So their role is much more advisory. Okay. And so the whole idea behind this segregation of roles is to ensure that your investments are well protected, to ensure that the risk of a single entity you know, running the whole process end to end is actually minimized. And of course, once you have different parties within, you know, the whole value chain, it essentially means that you can be able to manage the risk and ensure that investors' savings are actually well safeguarded.
Indeed.
So in a nutshell, you know, that's a simplified way of looking at you know, the collective investment scheme structure.
Indeed, there is Mr. Dixon Sembuya. He is the Director, that is Research and Market Development at the Capital Markets Authority. The theme for this conversation today, we are largely focusing on how best we can foster socio-economic transformation within Uganda through collective investment schemes. We do have one of the 5 collective investment scheme fund managers right here within the country, and he's the country manager for Sanlam Investments. That is none other than Mr. Mubale Mugalia. Very good morning once again, sir.
Good morning, Romeo.
Indeed. So as per the theme for the conversation today, how best can this country foster socio-economic transformation through collective investment schemes?
Thank you very much, Romeo. I would like to look at it as a contribution too.
Indeed.
There are quite a number of aspects that go into socio-economic transformation. But the call that we're answering, and I think this is very important for everyone.
Yes.
Dixon has touched on it. The call we're answering is, at the end of the day, we want to make more money for Ugandans. If they have more money for you in their pockets, particularly at this moment in time, they are probably able to then carry on consuming, and then consumption totals up to what we call GDP. So at this point in time, we have grown our assets under management as an industry to in excess of 1 trillion. Our estimates is that we are less than 1% of GDP. Our thinking is we can get to about 4 trillion within the next 5 years. That would put us at least somewhere about 3% GDP at that point in time.
But for now, so far so good with the 1.15 trillion
Fantastic,
shillings.
yes.
I'm telling you, you've already hit the targets for 2024, 2025 by as early as 2022.
Absolutely.
Indeed.
Absolutely.
Go ahead.
I have a personal attachment to unit trusts. I think Dixon knows that more than 10 years ago, I was fighting for the market to have unit trusts. So I'm really proud personally and thankful to the CMA and our, the general public that has put trust into us as managers, because 10 years ago we had zero. And to be talking about 1 trillion at this point in time is really something exciting. I think at that time, my estimates at this where we are right now, we should be at 50 billion. That was my limited kind of projection.
I get it, yes.
So being
because
at 1
of
trillion,
COVID and so forth, you felt like maybe people were not going to be saving more?
Actually, we're talking 2011, 2012. So COVID
before the
was
advent of the pandemic.
Absolutely.
I see.
So at that time, we were trying to start, to get the unit trusts going, and we thought maybe 50 billion in 10 years would make sense. Here
But
we
now
are in
you're talking about a
2022.
whopping 1 trillion.
Exactly. So when I mentioned that we can get to 4 trillion, I believe I'm still being quite conservative. But think about it. If we are generating, say, on average, a return of 10% on a trillion, that means we've generated 100 billion for Ugandans. If we take that number to 4 trillion, that would be 400 billion worth of capital generated for Ugandans.
Indeed.
So in terms of socioeconomic transformation, we believe that we can be part of that journey and maybe put some extra fuel in the tank for Ugandans to keep on going.
Indeed, Mubali.
Yeah.
It's really mind-boggling that many of our Ugandans right now are, grappling with the skyrocketing fuel, food, commodity prices, but then other Ugandans are saving. And we have a whopping 1.15 trillion Ugandan shillings. And then the president and the prime minister, of course, recently also came out and they said we've actually hit middle income status. If we actually keep this up, $1,046, that is the GDP per capita for the next 3 years. We are going to be a middle income country, but then other people are crying. And I'm here grappling to understand, what are the factors that led to this growth we are talking about, Mr. Mobali?
I would say that growth fundamentally is driven by purpose. We believe that we're doing something right. And as long as you're doing something right, then you will attract the right kind of people.
Let's break down those factors that led to the growth of 1.15 trillion.
Yes. So we can start with the numbers. 30,000, 32,000 Ugandans
Indeed.
as a fraction of the total population of Uganda shows that we still have, a significant journey to go.
Imagine if 27 million of the working adults were actually having accounts with the 5 CIS managers. We'd be talking about trillions of
Absolutely,
money.
absolutely. So if we're to look outside, beyond Uganda, we've seen some of the advanced economies whose GDPs, you know, in trillions.
Indeed.
And you'll find that the amount of money that they do have in unit trusts is actually either 100% of their GDP or 50%, which is a lot of money.
So you're saying the first factor that is leading to this growth is the fact that we have 32,000 investors.
Investors.
All right.
Absolutely. So that number has grown. It wasn't zero, but let's say we started from somewhere there.
Indeed.
And we're at about 32,000. The other aspect I would want to mention is that the 32,000, you know, did not come when we wanted them to come.
All right.
We had to do something right for some time, and we've seen this growth in investors actually accelerate in the last 3 to 4 years.
Because of the interventions you put in place. What were those?
I think the market, I think Ugandans are cautious, and I think Dixon has been a bit modest about people who have lost money in a number of schemes. But
Yes.
I think they've, over time, have grown that kind of confidence that unit trusts can actually grow your money, and when you do want a piece of it back, it's not that complicated. It's instant, and once you've tasted that, then maybe you can recommend to others. So I think we are at that point in time where, you know, the adoption is taking place, and we as professionals, then we are happy that we've provided that confidence in the market, and we pledge to continue providing that level of confidence.
Dixon Sembuya, we are breaking down the factors that have precipitated the growth we are talking about.
Just to add on to what my colleague Mugalia has said, as the Capital Markets Authority, I highlighted the fact that part of our mandate is market development. So we have been engaging in aggressive public education sensitization.
That's amazing.
We've been doing public awareness around collective investment schemes, and we've been doing it actually with the managers, those we license. So this has been a joint effort. We've jointly worked on, creating and raising the levels of awareness. And as a result of the
More
appreciation,
awareness, more investors.
more awareness, more investors, and as a result of that appreciation, then definitely most people have come on board. There's a lot more confidence, as Dennis has mentioned. People are more confident that this is a sound investment. Okay, but awareness has played a very key role. Then the other thing that I would also like to highlight is the fact that we now have 5 collective investment scheme managers. I mean, 2-3 years ago we barely had 2 or 3.
Let's break them down, because we are not going to be sending our viewers through the internet. Some may not be having the data, but they are now lucky to be watching NTV Uganda right now. So in tandem, let's break down those 5 CAS managers.
UAP Financials.
UAP, Old Mutual.
We have Sanlam Investments.
Indeed.
We have ICA.
Lion.
We have Zeno.
All right.
And Britam Asset Managers.
Indeed.
So those are the 5. But of course, they've all been licensed at different periods over the last 5 years or so.
Indeed.
Okay, and of course, the more managers you bring on board, of course, the more market development effort that goes into, creating awareness, bringing on board more Ugandans. So I think the addition of more managers into the space has also been a trigger for an increase in the total number of assets under management, as well as the number of accounts. And from a strategic perspective, CMA has prioritized collective investment schemes as an area of growth, and at a very high level, the focus is on growing this particular space, because we understand the potential that this particular space can play in terms of mobilizing savings from Ugandans, in terms of introducing Ugandans to saving and investing within the formal financial sector. So at a strategic level, the growth of collective investment schemes has been highly prioritized. Okay, and of course this has cascaded downwards to the entire industry. Okay, so at a strategic level, the idea is that let's grow this. Let's create as much awareness as possible. If more managers want to get into this space to enhance the development aspect, then please just meet the necessary requirements, and we give you the license. So I think these factors or these drivers, to a very large extent, have triggered the growth that you're currently.
The 5 collective investment scheme fund managers. But then away from those, are you privy to some of the reports that indicate that some people within our country who haven't been privy to this information are falling prey to the quacks that are actually purporting to be fund managers, but indeed they just want to steal money from our people? Are you privy to these reports?
Yes.
And how rife is the situation?
Yes, we've come across such reports before. And I think my first response is always, before you invest, okay? Before you invest, just ensure that you undertake the necessary due diligence.
Indeed. Before
you release your money. And someone always uses the example of land. Before you buy a piece of land, just look at the amount of due diligence you do. You'll visit the neighbor and ask them whether whoever is purporting to sell is actually the real owner.
The local leadership.
Okay. You'll go to the land registry, confirm that there is no encumbrance on that land. You'll probably have your lawyer do a second check. Okay. So it's natural for you to do due diligence. Okay. And I think that sort of effort, that sort of keenness should also be transferred before you invest. Okay, it's important for you to do due diligence. Ensure that you do the necessary due diligence. Ensure that you're only dealing with those who are actually licensed. And I've highlighted the fact that if you go to the regulator's website, that is the Capital Markets Authority's website, you're actually going to see a list of all those who are licensed to manage your money. Okay, these are licensed money managers. They can manage your money on your behalf. They have the necessary technical competencies. They have the necessary financial resources to undertake this type of operations. So do the necessary due diligence. Ensure that before you let go of your money, you've actually established that these are bona fide money managers who are licensed and who are recognized and who have been vetted. Yeah.
That is Mr. Dixon Sembuya. He is the director, that is research and also market development at the Capital Markets Authority. We are discussing and trying to find out how best we can actually foster socio-economic transformation within Uganda through collective investment schemes. Your money is put together, and this money is actually protected by a fund manager who is going to be using his advisory skills to ensure that that money is put into some good investments. And we are talking about assets under their management going to a tune of 1.15 trillion Uganda shillings. And we're talking about only less than 32,000 investors. Imagine if there were 100,000. How much would that be? 4 trillion and counting. We also do have the country manager for Sanlam Investments, that is none other than Mr. Mungalia Mubali. And Mr. Mubali, let's say Romeo Busiku, yes, with my counterparts Daniel Sebachi J, maybe Hinamundi Collins, Moses Taremwa, 5 of us would like to, save some money with you so that it can multiply. What is the criteria to be followed?
The criteria is actually very simple because we are answering that call, that it shouldn't be complicated. We would want to know you. We cannot invest on behalf of ghosts. Would want to, and I'm sure Dixon always checks to ensure that each one of our investors is an investor, not an imposter. We would want to know you a little bit. We, take down your financial details, because we believe that we are going to create a partnership over the long run. For us, a unit trust is not a product. We believe that if you have an investment account, it is something that you can use over a lifetime, and that kind of relationship is beyond, buy today and tomorrow it's exhausted. So we'd want to know some financial details and your personal details. You can reach us on, and I'm sure even most of my colleagues, either electronically, or you can make a phone call and someone will be there to walk you through the process. Most of the managers, you can invest as low as 100,000, which we believe that as a starting point for investing, it is not encumbering to Ugandans who want to embark on this investment journey. And what we then do is, when we're generating the interest for you on over time, or if we've invested in other asset classes, we ensure that we, communicate to you. Either you have a statement at the end of the month to see how your investment has performed. Have you added to your account? Have you withdrawn from your account? Do you have any questions? Are we doing a good job? You can reach out to us and maybe say, I think I need a little bit more in my tank than I'm getting. So it's a very open environment, and we're reachable on a various number
Mr.
of...
Sembuya hinted that if we are 5 of us, the money doesn't have to be uniform. Romeo can call some 2 million, Daniel Sevachije can call 5, Collins Inamondi some 10, Teko Emmanuel some 20. It doesn't have to be uniform, does it?
No, it doesn't have to be uniform. And that is why, personally, I feel that if you look at a unit trust as an investment account, it is akin to your bank account. Different people can have different amounts, but you use your bank account for transactions, you use it for other things. Because trusts, these unit trusts are very, very flexible, it means you can top up anytime you want. You can draw down within a day or two, which means that every time you have, a question mark around investing, let your investment account be part of the conversation.
I see.
You can question and say, I have an extra 300,000. I'm still thinking about what to do with it. Let it be earning interest. In the meantime, maybe if you get something else somewhere else, you can, divest and move into another asset class. Or if there aren't any other assets that are generating a good return on investment for you, at least let the money not be idle. Let it be somewhere earning an investment, and also provide justification when you need to move to other asset classes.
So all we have to do, the 5 of us, is pull this money into one area, and your job is to actually find out how best we are going to utilize this money.
Absolutely.
All right.
Absolutely.
So what kind of assets do you invest in?
We, across the industry, I think most of the assets are invested in government securities.
Treasury bills and bonds.
Bills and bonds. We do have, placements with commercial banks and other institutions. We do, I know some funds do have some shares on the Uganda Securities Exchange. So a unit trust per se is just a vehicle. It's just a vehicle, but because of the economies of scale of that vehicle, then you can access different asset classes across the market. Yeah.
What are the advantages that come with working with a collective investment scheme fund manager?
It's fantastic. It's a fantastic question, because the first collective investment scheme was created in the Netherlands. I think the year was 1775, 1774. All right. At that time, the capital markets in the Netherlands I think that was the biggest capital market at that time. But the challenge they faced at that time was accessing some of the the available investments. They were a bit expensive for the ordinary person. So there was a gentleman there, I think I've forgotten his name, and the design was simple. Let's have one pool that can invest in these big items, such that the individuals down there who can afford to play in the big leagues, if you can call it that, they can have access to it. But the journey then, I think, remained fairly the same until I think the 1930s, when in the American market, because at that time now the USA was the bigger market, and then mutual funds or unit trusts started to take a bit of shape by design. However, the volumes, even in the American markets, started to pick up in the 1980s, 50 years later. So for Uganda, I think we've had our regulations for almost 20 years, but we're talking about them right now. So in terms of foresight, the foresight was there, that we need these pools to help investors access these big pools. So that is the journey. That is the primary reason why these unit trusts are there. Then you have added on advantages of, having, quick access to your funds in and out.
Anytime you want to pull out.
Anytime you want to pull out. That's a very big advantage that, so many other investments cannot accord you. You cannot buy and sell land, within a month or two. And besides, sometimes you find that the cost of buying and selling land, the difference between where you buy it and sell it is substantially, the difference is quite big. Yet for unit trust, you can actually get in and out at fairly good market value.
What is the criteria followed when I want to pull out then?
The criteria is to get in touch with your account manager.
Right.
And they should be able to avail liquidity for you on your bank account within a short period of time.
What are some of the downsides that come with working with collective investment scheme fund managers? I've been talking to some people and they say that the fund managers, you're taking the biggest share, the biggest percentage. And the people who are saving with you are only taking, peanuts, if you will, like a smaller percentage. But the fund managers are the ones making a killing off of all the investment accounts. Is that true?
That is definitely not true.
All right.
And I would answer it this way. If we were doing that, we would not be in business by now. What we do, you will find that most schemes, the management fees range between about 1% to 2%. So if a scheme is generating, 10-12% for you net after management fees, definitely investors walk away with more money. And even the fees that we do charge on the schemes, there are operational issues. To have the best minds in Uganda managing your money, it does not come for free. Licenses, Dixon knows here that licenses don't come for free. The custodians who safekeep your assets to ensure that governance framework of that instills that confidence is there. It doesn't come for free. So our thinking is that because it's an open market and we compete, we definitely feel we add a lot more value for the investors and also protect their interests in the process. And I believe that is the most sustainable way of doing business.
Indeed.
Yes.
Dixon Zambia, you could be having any more additions to add on to that, but in tandem with the 5 CIS fund managers, have you had any trouble working with them?
I think before I get to that question, I think you actually asked Dennis the benefits of investing through a CIS manager.
Indeed.
And I think to me the major benefit is the fact that, from a regulator's perspective, major benefit is that you're working with a regulated entity. Okay, so there's recourse. In the event of, anything arising, you have recourse because this is a regulated entity. And this particular regulated entity is supposed to play by a certain set of rules. And there's a regulator who ensures that this regulated entity
so at the end of the day, you just sit back, relax, and just know your money is in good hands.
This is a regulated entity.
I see.
And, as a regulator, I think risk management is usually at the fore of most of our operations.
All right.
So you can always sit back and know that there's someone providing oversight. There's a watchdog in the name of the Capital Markets Authority.
All right, let's put a lid on that for now. We are going to go for a very short break, but when we do return, Dixon Sembuya, the Director Development and Market, that is the Director Research and Market Development at the Capital Market. Ms. Romeo Busuku, and you're watching the #1 station within the world, that is NTV Uganda. We are largely focusing on a very pertinent conversation. How best can we foster socio-economic transformation within Uganda through collective investment schemes? We do have some 32,000 investment accounts as we speak right now, which account for 1.15 trillion Uganda shillings. Imagine if we had some 200,000 investor accounts within this country. How much money would we be boasting about? Around 10 trillion rather. Yes. So we are here with Mr. Dixon Sembuya. He is the Director, Research and Market Development at the Capital Markets Authority. He's not alone. We also do have the country manager, that is Sanlam Investments, Mr. Mogalia Mobale. All right, before we went for a break, Mr. Dixon Sembuye, you were breaking down some of the benefits that come with working with Sanlam Investments and the other 4 CIS fund managers within Uganda. Let's move on.
Okay, I think I really emphasize the fact that you know, working with any of our licensed managers is you know, that gives you some extra degree of you know, protection in terms of safeguarding your interests.
And no headaches at all.
No headaches at all.
Where do I invest? How do I invest? Is this asset going to accrue money? So you just leave that to the fund manager.
The fund manager will do that for you. I
see.
think that's the beauty of this. The fact that you can actually sit back and let
focus on your work.
Yes, and let this professional money manager run the show for you.
I love that.
Decide what to invest in, when to invest, and at the end of it all, give you a good return. Okay, so that's, I believe, is the beauty of collective investment schemes. I think, to me, they are more of a passive investment. The fact that someone else is managing this for you, you know, allows you to passively invest and at a good return and in a safe and secure environment or framework. Yeah.
With the average savings of 24 million Uganda shillings per collective investment scheme account, invested mostly in treasury bills and bonds, what does this mean for the private sector credit and the wider economy, Mr. Dixon Sembuye?
I think if I break it down in terms of the private sector credit, I think one of the things that Dennis highlighted is the fact that if you look at where the funds that you hand over to this professional money manager are invested, some of the funds actually put in fixed deposit accounts.
Really?
And consequently, once that is once part of the investment is fixed within a bank, then that essentially contributes to credit creation. Okay, so to a very large extent, through those fixed deposit investments, and these are time deposits. Okay,
this money can be lent out to some other individual.
Now, this is held by the bank.
Fixed.
Yes. Held by the bank. So it essentially means that the bank is able to create credit from the fixed deposits.
Indeed.
Okay, so to a very large extent, then the collective investment schemes through the investment activities can actually contribute to provision of more credit within the banking sector.
Hence, fostering the socio-economic transformation we are talking about. Amazing. I like it. Go ahead.
And I mean, Dennis, Mr. Mugali also talked about investments through treasury bills and treasury bonds.
What are treasury bills and bonds?
Treasury bills, let me start with treasury bonds. This is an IOU, okay? And so this is the government of Uganda borrowing from the public.
All right.
And in return, committing to provide interest, and at the end of the term of this particular bond or instrument, paying you back your principal. So it's basically an instrument or a tool that the government uses to borrow from the public, but usually in the long term, okay, for a period exceeding more than 12 months.
Indeed.
Or more than a year. Okay, so that is a bond, which is long term. Okay, now the bill is usually short term, where the government borrows from the public and provides a return and pays back the principal at the end of the term of that bill, but for a period less than 12 months. So when collective investment schemes invest in treasury bills and bonds, to a very large extent, they're contributing to that budgetary. They're contributing to the budgetary financial resources that are available for the government to provide, the different social services. Yeah. So through this particular financial instrument, that is the treasury bond or the treasury bills, the collective investment schemes are actually contributing to the government budget, and they avail resources that the government can then use to provide the necessary social services as well as infrastructure.
Hence the socio-economic transformation you're talking about.
Yes.
I believe the viewer is following in tandem with us. Go ahead. We are done with the treasury bills and bonds.
Yes.
Capital markets. Go ahead.
Yeah. So basically, looking at it from that perspective of the social economic transformation, I think collective investment schemes are actually playing their role. They're actually playing that particular role. Okay, and I think you talked about the size of accounts, the size or the investments per account.
24 million.
24 million, roughly about 24 million per account.
Out of the 32,000 investor accounts.
Out of 32,000 investor accounts. And I think I was using the example of other jurisdictions.
Ghana with 750,000 CIS.
accounts. Average per account is roughly $1,000.
Around 3.6, 3.7 million here.
Yeah, which I think should be the case in Uganda.
So you mean each account shouldn't be worth 24 million Ugandan shillings? Should be around 3 million.
We need to find a way of making this a mass product.
Okay.
We need to find a way of ensuring that as many Ugandans as possible are actually opening up CS accounts. Dennis talked about CS accounts being akin to your savings or bank account. Okay, we need to get to that point where, when it comes to, saving, the first thing that comes to your mind is saving through a collective investment scheme account, and of course, awareness is the key to unlocking that huge potential in as far as making this a mass product and increasing the savings that are mobilized through collective investment schemes for the socio-economic transformation.
So you mean if we have more investor accounts, each account would have to cost some little money, not 24 million. The money would go down to probably 3 million. If we have more investor accounts like Ghana. Yes. I see. Go ahead. This is interesting.
So the idea is, like I've said, we just need to increase the level of awareness.
Indeed. Have more investors.
We need to have more Ugandans appreciating what collective investment schemes can actually do for them.
Indeed.
And the role that collective investment schemes can play in as far as providing that avenue vehicle for saving for that decent return. And as a regulator and together with the industry, I think we are moving towards that direction of increasing the level of awareness, making this a mass product, and ensuring as many Ugandans as possible actually utilizing this particular investment vehicle to save and invest. Yeah.
All right, Mr. Mugalia, we are talking about the fact that each collective investment scheme account is actually investing at least 24 million Uganda shillings, yes, in treasury bills and bonds, mostly. So what does that mean for the private sector credit and the wider economy, in your perspective, as the country manages Sanlam Investments?
If we were to look at private sector credit, I think Dixon has talked about how the transmission would work.
Oh, yeah.
Because effectively the collective investment scheme becomes a funnel. We form part of the collection of funds, and then once those funds are in a nice bottle which keeps on growing, then the banks can tap into it to increase their level of deposit mobilization and also eventually lend to people. We also take note that we have a very big Sacco economy in Uganda. It's not as big as it is in Kenya,
Indeed.
But we are growing. And essentially, particularly in my experience, the Saccos are forming a very good platform in terms of credit creation, because they are in touch with their members, they know their risk a little bit better, they are managing their risks because it's a relatively closely knitted community of individuals. And what we are seeing right now and what we are actually doing with Saccos is to help them with treasury management of their balances. Members contribute on a monthly basis, but not all the funds are lent out to members by the end of the month. So Saccos are finding it very, very, friendly that there is a simple investment vehicle where, as the money is still in transition, it is still also earning income to them, which income is also later on available for them to borrow. So we've had a number of engagements. The same conversation is with investment clubs. And all of these are adding a little bit extra, but they're adding a little bit more dynamism in how Saccos are operating. And because they also see how we do things, they also learn a few things on how to deal with their members, how to, the advantage of professionalism.
Yes, Mr. Mubali.
And I recently attended, I think, an AGM of about 300 Saccos about 2 weeks ago. And definitely the level of activity has continued to scale, and I'm excited about that side of credit creation as well. Yeah.
All right, let's talk about policy, the policy framework within Uganda. Mr. Mubali, what kind of policy enhancements could further improve collective investment schemes and their performance within Uganda? In tandem, what kind of hindrances are actually impeding growth in our country when it comes to the collective investment schemes?
So in terms of policy, we're basically looking at a situation where recognizing government as a partner in the industry, because in any incidents, many a times people look to government as a handout kind of situation, or they're coming after you for taxes, or we look at it from the other side of the fence. In my opinion, I think government is more of a partner. They have their objectives also. Other Ugandans in general also have objectives. Our thinking is that in a partnership arrangement, then you always sit down and negotiate and say, we can try to do this and it would help you do Y. So, for example...
What exactly would you help them deal with? Because already you were investing in treasury bills and bonds, so a partnership was already struck and it was thriving. So what kind of a bigger relationship are you looking at?
We are looking for more support, say, in terms of taxation of unit trust income to the members.
That's a good one.
We are looking for, as and when we are going out to do investor education.
Oh, yeah?
I know capital markets is doing, I think everyone is doing their part. But when you look at the numbers, we have a long way to go. 32,000, we are barely scratching the surface. We are looking at support in terms of as and when government is rolling out their NDP, their objectives for the financial services sector. They might not accrue to us directly, but they form part of the fabric. Case in point, I'm sure commercial banks and everybody appreciated national IDs. There was a time when national IDs was a problem. How do you onboard an investor who you don't know? But we've sort of moved along in that direction in terms of having confidence in the process.
Indeed.
Yeah.
Yes, Dixon Sembuya, you wanted to make an addition to that, policy enhancements that could further improve the performance of the collective investment schemes. Hindrances as well.
You'll allow me to go for the easier bit.
Please do.
Which is, the policy aspect of it. I think from a policy perspective, if you look at the legal regulatory framework, the Parent Act was actually developed in 2003. Okay, so with the passage of time, of course, there've been so many changes within the sector.
Indeed.
There's been growth, you name it. So as part of policy interventions, the current legal regulatory framework for collective investment schemes is being reviewed. It's being revisited to, assess whether it's still relevant within the prevailing economic environment or within the prevailing environment. So the legal regulatory framework is one part of it. Then secondly, Dennis talked about most of the investments being in government securities. So government bonds, you name it. I think there's a policy effort towards ensuring that the government bond market space is more efficient. It works better for all the different players. And of course, once the government bond space works better for all the different players, it essentially means that collective investment schemes can then give better returns. the operations will be far much more eased as a result of a more efficient government bond market space.
Indeed.
So I think those particular policy interventions should to a very large extent contribute to enhancing growth here and there. Yeah, and of course Dennis alluded to the issue of taxation.
Yeah.
Yes, there's some
What would be the right taxation framework? In line with the pronouncements from the Uganda Revenue Authority, of course.
Now, allow me not to pronounce myself on that particular matter, because
Understood, because I know you don't want to clash with the URA.
It's being dealt with at a very high level.
Indeed.
So I may not really want to dive into what is the most appropriate and what is not appropriate. But I believe all the different concerned parties are working together so that we try and come up with a taxation system that favors the growth of Uganda's collective investment scheme. So I think, to me, I'll focus more on the end result, which is that ideal taxation regime for the collective investment scheme, space, developed with contribution from all the different players. So that is work in progress. That is something that is being handled at a very high level.
Oh, okay, you were adamant to dive deeper into that, but I know there is something you are eager to dive deeper into. Closed-ended collective investment schemes. You've been thinking about this as the Capital Markets Authority, haven't you? Is Uganda ready for something like that? And what are closed-ended collective investment schemes, if we will start with that?
Is Uganda ready? I think we will never be ready.
Let's first break down what are closed-ended collective investment schemes.
Okay. Now, what are closed-ended investment schemes? Allow me to start with what an open-ended collective investment scheme is.
Amazing.
Then it gets a bit easier for someone to understand what the closed-ended investment scheme is. Now, for the open-ended investment schemes, they're actually allowed to create and redeem units continuously. Okay, they can create and redeem units as and when there's demand. Okay, so you create units when there's demand, and you redeem when there's a request for redemption. So they can continuously create units. Okay. Now, turning to the close-ended investment scheme, now that's the opposite. You cannot create and redeem units as and when there's demand. Okay. So you have a fixed number of units. Okay. And so it's those fixed number of units that will either be bought and sold.
The pros and cons that come with that, is Uganda ready for something like that?
Now, and I was trying to respond to that question. I don't think there'll ever be a time when we'll be ready.
Indeed.
I think the time is always now.
Even when it comes to saving, you're never ready.
The time is always now. You can never be ready.
Indeed.
You just need to do it now. And probably someone was asking the same question 20 years ago. Are we ready? But someone had to start. Okay. So you always have to start something. Okay, because you'll never be ready. I mean, if you're to meet all the requirements, you will basically never be ready. So the time is now. And I think in terms of product diversity, in terms of providing other alternative vehicles to mobilize savings for the economy, then closed-ended funds can actually be that particular vehicle. So to me, the time is now.
Oh, yeah.
Okay, the time is now. Let's try this. Let's make it work.
And thank you so much, Dixon Sembi. And of course, we have some 2 minutes or less to wrap up this conversation. And of course, we do have the new budget reading that is on its way. That is this week, tomorrow. And we're talking about some 47 trillion Uganda shillings this time in the new budget. Do you see any vision from the Ministry of Finance when it comes to growing household savings, Mr. Mobale? Because we're talking about partnerships with the central government and how best they can, help our people. So if our people are helped when it comes to growing their household savings, we would have more people, investing with Sanlam Investments, and would grow more accounts away from the 32,000. So is there a vision that you could actually throw towards government, like a recommendation to grow household savings? Moses isn't here to help us with that.
I wish he was here to help us with
Indeed,
that.
I wish also.
I guess
at least something for the government.
As a partner, what government can do is to ensure it has policy, and it has that policy backed up by the sufficient resources to get it working. I believe that the The planning side is in place. We have an NDP and all those items.
Parish development model.
Exactly. We
Yes.
just need to keep at it and execute. Once we execute, then 5 trillion, here we come.
Indeed. This conversation was largely meant to be executed by 3 individuals. The third one was Moses Kagwa, the Acting Director, Economic Affairs at the Ministry of Finance, Planning and Economic Development. So, of course, if you are to grow the number of savers and investment accounts in the country, household incomes and their savings have to also grow in that regard. Many thanks to, yes, Mr. Mubale. He is the Country Manager, Sanlam Investments, and also Mr. Dixon Sembia, the Director, that is Research and Market Development at Capital Markets Authority. Thank you so much for having made the time to speak to NTV Uganda on this pertinent conversation. Thank you, gentlemen.
Thank you very much.
And indeed to you, viewer, thank you for having joined us from 11 a.m. up to now. When concluding this conversation, we're largely focusing on how best we can foster socio-economic change through collective investment schemes. Grow and set up an account with Sanlam Investments or any of the 4 collective investment scheme managers within the country to grow your savings.